Hello everyone, I hope you are having a great time. You are welcome again as you consider for day trading. This particular strategy is what? Smart Money Concept, that's SMC with AMD Confluence. SMC, Smart Money Concept, right? AMD, Accumulation, Manipulation, Distribution. That is the full meaning of AMD. Then the Confluence there is this. It's just there to help us to add more confidence to our trade that yes, when we see this type of structure in the market, then we see another block here, we can enter it just because of what price action is trying to tell us with what using AMD as what as our additional confirmation, which is confluence. All right, so we know our SMC already. This is bullish market, price is making this type of movement, inducement taken, break of structure, inducement taken again. There's other block here. We expect price to do what? To buy from here and take out this high point, right? That does our smart money concept. Then what might be confusing for people is AMD, accumulation, distribution, accumulation, manipulation, and distribution. This is majorly for those that are trading session. And in forex trading, we have three major type of sessions, meaning we have the Asian session, the London session, and then the New York session. So the Asian session, they usually call it for accumulation sessions where there's no low liquidity. So that is what I've drawn here. Accumulation, that's for Asian session. Then this pullback that now happened here is for what? The London session. Then the distribution where price will now buy is for what? Is for the New York session. So all of these things, we are going to discuss it more and more with this concept. Very easy to understand. Okay, now we will now look at the table of content, which is the things we will need to know for us to apply this strategy for day trading so that we can be profitable. First thing first is to do what? To look at the recommended trading time frame. We'll look at that because as a day trader, you need to get a particular time frame you have to be trading with, not just you see 1 minute, you see 2 minutes, you see 3 minutes, or just randomly trading like that. It doesn't go well. Okay, we need to fix our mind on a particular time frame to trade with. So number 2, we'll look at recap of essential market structures. I said structures because we have different type of market structures that can pop out by applying SMC. So number 3, now we'll also consider recommended time to trade and apply the entry. Are you trading in the night, in the morning, in the afternoon, in the evening? All of those, you just have to make everything logical. This is the purpose of this strategy, making everything just being what? Logical. Now we'll also look at AMD session indicator. On trading view, there's what we call session indicator that will automatically map out the Asian session, the London session, and the New York session for you without stressing you out. Then since you are not using since this indicator cannot be found on Derive, if you want to trade volatility 75, any other, all those volatility pairs, all those things, they are not available. This indicator is not yet available on the Derive platform. So I will also explain to us how to apply the indicator manually. Then we'll be looking at number 5, entry modules or entry models. When you see a particular thing that happens in the market using this strategy, what do you do? Which model are you applying? All those things, we will look at them. The rules also to tell you this is what you should do, this is what you should not do, so that you can be consistent by trading with this strategy also. Then lastly, we'll be looking at risk management. Very, very important. How much are you putting in? How do you split your money into? How many pairs should you be trading? Should you be over trading or not? All those things will be well explained. So in part 1, number 1, as we'll be looking at is a recommended trading time frame. As a day trader, by backtesting, for testing, all of those, you see that on the 15 minutes time frame, price tend to give a lot of price action, a lot of entries, all those things. That is the major reason we are using AMD as our confluence, because if we should be going with SMC market structure alone, the market structure that will happen with smart money concept, that or may have a lot of losses, and our winning or losses, all those things, they may not be consistent. So we just want to make everything logical. So we are going to be stick with what? 15 minutes time frame. Okay, that's what we're using. Then if you can do your own back testing for testing and check your result out, and you see that 5 minutes can work very well for you, you can also stick with what? 5 minutes. So but for this strategy, we'll be using what? 15 minutes as our what? As our time frame to map out the market structure, and then use AMD Confluence for our entry. Number two, in this part one that we'll be looking at is what? Recap of SMC market structures. You know, market structures can come in different form. The first form that price can come in, price can give inducement. This is for bullish market, okay? So price can also give us for selling market, bearish market. But I'm making this example using a bullish market scenario. Price can give us what? Inducement. Price take out the inducement, making this high point confirmed. Then we expect price to give us something like this, giving us a break of structure. Then we expect price to come down, take out this inducement, tap on this other block and do what? And continue to buy after the pullback. Okay, so that's the first market structure type that may happen, that price can present itself with. Number two that can happen, price can give us inducement here, break of structure. After that, price make first pullback, second pullback. It can make a lot of pullback, but in as much the inducement, the pullback was not taken. The first pullback that will be taken after break of structure will be what? Considered as our what? Inducement. Very, very important. Okay, so the first pullback will be inducement. Second pullback will be what? Decision order block. In as much there is a valid order block there. Then the last pullback will be what? Our extreme order block, called EOB. By now, I believe you should know that. So if you don't know about how we come about our market structure mapping, all those things, you can check them in the playlist. I've listed everything there on how to easily understand smart money concepts and all of those. Okay, so I'm going to show some examples so that we can easily familiarize ourselves with this market structure. But I want to say something very important, which is this strategy, for you to backtest it, for you to even understand your valid pullback, understanding of valid pullback, all of those, it comes easily when you are using Derive. Okay, when you use that Derive trading view, you can open it on Chrome browser, any of your browser, on your laptop or on your phone. Then you just go to Derive trading view implementation. It will automatically show you. That's where we'll be going to now. So the price action there, they are very clean. There's less force pullback, where you begin to look for how the exact point that price break, the exact point of break of structure, all those things. With trading view implementation for Derive is very easy to understand. Then when you have done that already, you can now come to what? You can now come to trading view, the main trading view, to do your forex trading and Bitcoin, crypto, and any of those other trading, futures, stocks, all of those. So I encourage you to use that Derive implementation trading view to do your practice, understand the strategy very well. Then you come to the main trading view, you can check for your pullback, get your market structure right, and then apply it accordingly. So let's make these two examples for the first market structure that we can see in the market, and then second type of market structure for this to happen with this our strategy. Okay, what are we looking at here? This is step index. I'm on the 15 minutes time frame, as you can see it. Then what is happening here? We see that price gave us this type of structure, pullback, inducement taken, break of structure, and then all this leg here just pull back, no inducement taken. From the left hand side, what do? We see that price took out this inducement, making this low point confirm. Then price came now, cause a change of character. After that change of character, by price closing above this main high point. Okay, after that change of character, what now happen? We expect price to do what? To make a pullback. This is the first pullback, and you can see on this leg, by checking it out, there's no valid order block that we can use for our additional order block. Okay, so since there's no valid order block for additional order block, meaning that All these points is just what? Liquidity point. Nothing to take note of in that place. Then at this last point, this is where I now saw that yes, we have a valid order block here. So this is the first type of structure that happens. After change of character, the first thing, the market was making downward movement, downtrend. But with this is now what? An uptrend. With an uptrend, what do? We expect price to do what? To buy. So after price has taken out this inducement, then what do we expect? Since there's no valid pullback, since there's no valid order block there to serve additional order block, this is now for market structure type 1. Type 1 market structure. Then we expect price to do what? To come into this order block and then do what? Tap into it without any lower time frame confirmation. Before we now say, okay, when price get there, we'll go to 1 minute to look for entry module. No, we expect price to come into this order block and then tap into it to do what? To continue to buy. And you can see that I've placed a buy limit there, but nothing, the price did not tag along. Price just got to this point, just reverse and all of that. It might have its meaning, maybe because of order flow. Price might just use order flow to enter this trade, and then when you go to lower time frame, you see all those things. But those things may be complicated. That is why it's better to get it easy, to make it easy to understand, and then you can move along with it. Because sometimes price can use order flow, but price can also use what? The order block. So our major target is either the inducement point or at the order block, and we will discuss all of these in when we are using the we will discuss all of these in the entry modules or entry model for easy to understand process. So you can see that the market structure telling us that price was bearish before, which is selling, but now price has changed to what? To buying, because when price took out this inducement, price came out and then took out the major high point, close above it, make this type of pullback, then want price to take out inducement, anticipating price to do what? Tap into this other block and continue to buy. That is just the first type of structure involving inducement and then order block for entry. So let's go to the second market structure that price can give us. All right, everyone, you can see this is for market structure type 2. This is for 15 minutes also, volatility 25 index, 25 IS index. So what happened here? After price took out the inducement from the left hand side, price made all this pullback, left behind another block here, then making all this series of pullback, then causing a break of structure, right? After that break of structure, what do we expect next? Market is just making all this pullback, and then all those things. Price took out inducement here, causing another additional order block in that place. Price make all this movement, all those things, giving my entry, all those things, and then we expect price to do what? To come down. This is entry. This is market structure 2. So we are not talking about entry now. We are talking about the structure. We can see. Let me zoom in. So by the time I zoom in, you can see it. This is the first pullback. You can see is valid. Price just make this movement, and then price took out inducement. After inducement, you can see that this other block also is valid. Why? Because you can see the candlestick formation, pullback, then going up, all of those. So the candlestick, the other block here has not been mitigated before. So when price get to it, you can see that price reacted, all those things make a pullback. So this type of market structure is called what? Is type 2 SMC market structure. Why? Because it involves, after the break of structure or change of character, it now involves what? Inducement. It now involves what? Additional order block. Then this red line I drew here is now what? Engineering liquidity. Why? Because engineering liquidity is the last order block. Is the last pullback before the extreme order block. So this is the last pullback now before this extreme order block that price can come into also. So I hope this is very clear to understand. If you don't understand the market structure mapping, how we get our market structure, all those things, I will leave a link down below. You can study, try to get your structure right, because if you understand where price is going, it is very, very easy for you to do what? To be able to tag along with it. I hope this is very helpful as we go to part 2. Have a great time.